and go over that. So let me get started. My name is Kadeen Shaw. I am your professional educator. Again, I'm going to do some market analysis for you guys so you guys could tap into some zones to let you guys see what to look at. Do some recap to see, what has been happening in the market for September and what can we look forward to for October. So the first thing you see on my screen right now, again, I'm going to go through the futures. I'm going to go through the indices for the U.S. market, and I'm also going to go through some of the inverses, the VIX, and then some of the tickers that you guys asked for. So first, I'm going to look for, again, YM. So futures right now, again, the market is open for futures. So you guys already know that. Start looking at the futures. So what I could show you right now, I'm going to start with the monthly. And what I've done right now, if you guys can see on YM futures, which is the Dow E-mini, I plot some resistance or potential resistance and potential support. And again, you guys can definitely see this and go back and rewind it and pause it once I post it on YouTube. So some potential resistance on last month, which is September. We can see that price closed, which was initially support, but price closed below it. So now this is going to be, for me, resistance. I'm going to see how this acts as resistance. Let me go down to let you guys see what's happening right now. This turquoise for me is a daily demand zone, these two daily demand zone. So what I'm looking for right now, I'm looking for the market in general just to come down. We're going to potentially see some more downside just because we're still into bearish territory. So we may potentially see the market somewhat swing down here. This is a support. This green line is support. So I'm looking to see potentially swing here. You may see it even go lower. So let me go ahead and change this to and leave it red. And also once we may see a bounce from there and then go back up here to resistance to go test that level. So that's what I'm looking for overall for YM. Initially, you can also see a bounce right at the support line. So price may come down here to the support line at 29,966, and you may also see a bounce from there. So again, just take pay attention to that. That's futures YM. Let me go down and show you guys how it's trading right now. I'm going to go down to the daily. So if you're looking at the daily, again, I mentioned that futures is open right now. So you can see right now, the market is open. I do have some trend lines that I'm rejecting from. So it did bust through on Friday. It bust through it closed below this daily demand zone. And now its price is trying to push back up. You can see this trend line, this downtrend line is rejecting price. And then this daily demand zone is also now acting as resistance. So price is trying to push further down. So we can tell that we do have some more downside in the market to go. If you go down to the 4 hour, you can even see price even pushing further down. So that's why in futures. Let me go ahead and go to ES. So those of you guys who trade ES or SPX, and even if you trade YM, remember the Dow, any ticket that you trade under the Dow Jones, you want to follow the YM and look and see what the YM is doing overnight from 6 p.m. the day before to kind of get an idea of what your underlying will be doing the next day. For those of you who trade stocks that follows the S&P 500, this is ES right now. ES is also trading. Initially, this yellow line that you see right here, this was a monthly, the bottom of a monthly demand zone. So I'm going to delete that because price closed below that on Friday. This was also a weekly demand zone. Price also closed below that. So we can see that. And this was a daily zone. So this was a triple zone that price on Friday on ES blew through this on the monthly. So the month closed on September closed below that triple zone. So now what I'm doing is you're going to see this is going to become, for me, resistance. So I'm looking to see how price is going to reject from this area, which was initially support, once price pulled back up to this level and trying to see what's going on. All right. So right now you can see this turquoise line is a daily demand zone. So you may see some hesitation there when price. So as you can see right now, some stuttering. Price is coming down to this line. So it may stutter, but you also have this downtrend line that's acting as resistant. And I think I do have a few more trend lines to go acting as resistance. So let me see. And initially also, I do have some resistant level at the top and some support level at the bottom. So I'm going to leave that for a second. So that's ES. Again, we do have some. So what I'm looking for ES to do, I'm actually looking for ES to come down and test this support right here at 33.9750 area. I'm looking for ES to test that support and see if we can see a bounce. We're going to potentially see a bounce. If I do get a bounce from here, then I'm going to speculate that price may pull back to this level here, to this rejection line or this resistant line. And then from there, again, you may see the market even go further. So this support line is going to be important for me because, again, if price closed below that, then we can tell that the bears are still in the market. But if the bulls are able to hold this level and push price back up, you may see some rally to the upside just for some small gains to the upside. So that's going to be ES for you. All right. If you trade anything in the NASDAQ, again, the market is potentially moving the same way, as you guys can see. So on the NASDAQ, I won't even go to the monthly. I'm going to start on the daily for the NASDAQ. So on the NASDAQ, I can see right now the NASDAQ closed below this daily zone. So I'm going to delete that. And it's also now inside of it's still inside of a triple zone. The yellow is my monthly demand. The white is my weekly demand. And the turquoise is my daily demand. So it's inside the second daily demand zone, which is also, it's actually going through this daily demand zone. So I can either delete it, or I'm going to delete it because I have another daily demand zone right here. So I'm looking to see how price is going to react to this zone. So I'm potentially for NASDAQ. If you trade anything on the NASDAQ, any stock, any tech stocks, you know, tech has been down for a while. So you're going to see some potential more downward movement. So I'm initially looking for NASDAQ to come down here. And this is the NASDAQ mini, right? This is the futures. I'm potentially looking for price to come down here, find support, potentially pull back, maybe up here, or if it even goes further, I do have this down trend line up here at about 11,926 area that may potentially now push price all the way back down to this other level here. So on the contrary, I do have some other levels down here, but I won't reveal that because again, we need price to go down. So right now, NASDAQ is the futures is actually testing now the triple zone. It's already in the monthly. It's deep inside the monthly. It's crossed down inside the weekly demand zone, and now it's testing this daily demand zone. So I'm looking to see if price is going to come down here to the bottom of this zone and then get a pullback. What am I also looking for? I'm looking for my candlestick pattern formation. In addition to that, I can tell that even though we're downtrending, remember the market moves in higher highs, higher lows, lower highs, lower lows, right? So right now we're downtrending, and because we're going impulsive, pull back. Impulsive, we're going to look for another pullback. So I'm going to look for a retracement. Hopefully when price come down here and end, I'm speculating for the impulsive move that's going on right now to potentially end right here in this area about the 10,655 area. And if we can see the move end here, we may potentially see a pullback. And once we see a pullback, this trend line is going to be important to see if price is going to break above it or if we're going to have another impulsive move and go even further down. One other thing I'm noticing with the market in general, we're going to actually see some upward movement. Why? Look at volume. Right here, you can tell that volume has been increasing, right? Even though the market is going down, volume is going up. So remember, I tell you guys that volume precedes price, momentum precedes price. So this is telling me that from all this strong selling pressure that's been going on, we're going to potentially see some buying coming up because this volume is telling me that we're going to go up. So you're going to potentially see some upward movement. Again, not sure how long that will last, so definitely be mindful of that and not to get trapped in the bull trap. But we're still in a downtrend. So again, this is going to be potentially the pullback. And then for me, again, I'm going to trade with the trend. So I'm going to wait for that pullback to end and speculate when that impulsive move is going to start again and ride that down. So that's what I'm looking for NASDAQ. Let me go down to the VIX. The VIX is one that you guys, VIX has been choppy, right? And the reason why the VIX has been choppy, a lot of time, if you guys look at your contracts, if you guys look at the data, there's a lot of call contracts on the VIX. A lot of investors actually have call contracts on the VIX starting at 30. Some at 35, 40, I think 45. There's even up to as much as 80. So some investors actually have call contracts on the VIX between 30 and 80 for call contracts for the month of November only. So for this, I'm sorry, for November. So that means they're trying to actually hedge their position. So in the case that the market drops tremendously, they're trying to hedge their position against volatility. So that's why you haven't really seen the VIX move a lot. It's been sedated just because of those call contracts. So I'm actually looking to see what the VIX is going to do. This is a daily right now. The VIX is still inside this triple zone. It hasn't been doing a lot of reaction inside the triple zone, and it's solely because of those call contracts that's now sitting in the system. But you can see that price came down and rejected from this uptrend line. So I'm curious to see what the VIX is going to do. I do have this downtrend line as potential support. So as you can see now, this yellow line, which is a monthly trend line, If the VIX come down to about 28, 27 or so and reject, you may see a spike up to the top. It can also potentially come down to 26, 16 before it spikes up. I have 38.20 as a resistant level for the VIX. If the VIX close above that, do expect some more upward momentum on the VIX, meaning the market is going to be going down. All right, so that's going to be futures. Let me jump into our U.S. market right now. I'm going to do SPX and the Dow. So I'm going to start with the Dow Jones. I'm going to do SPX, and I'm going to do SPY, and then move on to Apple and some of the other uptickers you guys asked me about. So looking at Dow Jones, same thing for Dow. Let me go to the monthly right now, because again, I look at Dow, and Dow, if I'm looking at this, you can see this this pattern, right? This pattern is more of a, you're going to call it somewhat of a scallop, if you may. So it could be a potential scallop, but also a cup and handle. But I'm looking to see how this is going to play out. One thing I can tell you about the Dow, I'm going to show you real quick. This area, I marked this area as an area of interest for me. Why? Because the Dow, you can see right now, the Dow is closing this weekly gap. These two dotted line, which is white, this is a weekly gap. So the Dow is almost done closing this weekly gap. Also, at the bottom of that, I do have a potential support. My first support 1, and I have a support 2 down here, which is my green lines. And what does that mean? So once Dow, when again, we start in October, if Dow is able to come down here and finish this gap, there's a daily demand zone here, in addition to the start of a monthly demand zone. And I also have this potential support. So I am expecting somewhat of a bounce from Dow once it finishes the gap. It may push further down, but I'm expecting somewhat of a bounce. But again, if it does bounce and go back up, I do have a resistant level here at the 29,568 level that we may potentially see it bounce and resist from there to go even further down. I'm watching the Dow for this level down here, because this level is a triple zone for me. It is inside of the monthly demand zone. It's inside of a weekly demand zone, and you do have a daily demand zone here. In addition, I have this second support. So this is 4 confluences for me right here. So if price does come up here and reject, and you can see potentially price even come further down to this level here before we start moving. So again, that's the DJI. Let me go to the daily and show you guys what that looked like. I don't think I have a weekly on this one. So we're actually in the weekly right now. So this is a triple as well, weekly and daily. And let me make that bigger so you can see what it looked like. So we're trying to close this weekly gap. We're going to end up at the bottom of this gap, and then we're probably going to end up closing and hit this daily demand zone. If it does go into the daily demand zone based on momentum, you do have this support at this level that you can potentially actually depend on. So we just watch and be patient as you guys look at the market. In addition, I don't think I see any more zones. Let me see if I can see any demand zones or supply zones in the vicinity. We do not. All right, so let me jump down to SPX. I'm going to do SPX, and I'm going to do SPY, and I'm going to jump to the tickers that you guys asked for. All right, looking at SPX, a lot of you guys who trade SPX, SPX is somewhat similar to ES, like I mentioned on the futures side of it. As you can see right now, the future is currently down. All right, but those levels are going to be important. So on SPX, I do have a few support that I'm looking for on SPX that I've been watching right now. Price on September did close at my first support, which is at 35.8811 area. So price closed roughly above it, below it rather. So it did close below my support. But again, I'm looking to see how far down it's going to go. If it does go further down, I'm going to now turn this support into a potential resistant. I'm going to change the color and then see how price react once it come back. But right now, I'm going to still leave it as support for now until price come down further into my zones. I do have a daily, but I'm watching this area down here for SPX. So price can potentially come as low as 33.96, 36 on SPX. Why? Because it's a second support level that I'm looking for. In addition, it's going to be a triple zone for me. So it's a monthly zone, a weekly zone, and a daily demand zone. So you can potentially see price literally come all the way down here. You may see some pullback, but then even go further. Let me go down to the daily so you guys can see. In addition to that, volume on SPX for me is not really nice. I don't like it. The reason why I say I don't like it, I don't see really any strong upward movement for the volume. So it doesn't give me any indication that we're going to be pulling back as much right now. So I'm going to keep an eye on that, or keep an eye on SPX to see how it pulls back. But right now, I'm just looking to see what's going on. So this is my zone for tomorrow and where I'm looking for SPX to travel tomorrow between these levels. And I'm going to drop those in the chat once I'm done with this live. So between this orange zone is my ultimate high and then my intermediate high. And then this gray to this bottom are going to be my lows. So again, if price is going to be going down, of course, you're going to know we're going to be looking at the lows. But if price is bullish or if the market is bullish, we're going to be looking at the highs. So that's going to be for SPX. Let me go ahead and see if I see any zones in here. Any supplier demand zone that need to be. No, we don't have none. All right, so that's SPX on that level. Let me go to SPY real quick as well. Same thing for SPY. I'm going to tell you the levels I'm looking at for SPY. So SPY right now, I have a support, this green support that now it actually got closed. The market closed below it on Friday. So September closed below my first support. So I'm going to, because it already closed below it, I'm going to change it to my potential resistance right now. So I'm going to see how price react when it pulls back to it on the lower time frame. This is a monthly. So let me go down here. My second level that I'm looking at for SPY is 350.72. So I'm going to see how price react to that level as support. There's also a daily zone there, but I'm also looking to see price potentially can go all the way down on SPY past the 339 area, even lower than that, because that's my support. But then I have a triple zone at the bottom. So again, you can potentially see price fall as low as this level before we actually start to turn back around. But before that, you typically will see a pullback. Again, whenever the market is trending, you're going to see a pullback. It makes an impulsive move. Retracement, impulsive retracement. So as I'm looking at SPY right now, I can tell you where we're in. We're currently in an impulsive move for SPY. You can see when the market started going down, we went impulsive down and we retraced a little bit. And we went impulsive, retrace. So we were forming lower highs and lower lows. So we got another impulsive retrace. So whenever you guys are trading in a downtrend market, your goal is to get in on the impulsive side. All right. You want to time it when the market is going to do that impulsive move, because that's that big move. You don't want to be on that retracement side of it, because again, it's very short compared to the impulsive move. So you can potentially get caught as a retail trader. You know, those big banks, they're trading the impulsive move. So you don't want to get caught. Whatever little gains you may get from this this retracement may be wiped away. So right now you can see impulsive, retrace, impulsive. So a little bit of impulsive, retrace. Now we just got a long impulsive coming down that's passing the summer lows. So I'm looking for SPY to potentially come down as low as maybe this here before we retrace a little bit, or even further down into the monthly, and then we can see another retracement. So we're looking for that on SPY. So the levels for SPY is 350.72 is my first one I'm looking at for potential resistance. And then after that, 339.08, I'm looking to see some potential resistance. Also look at your candlestick formations. Let me look on the 4 hour to see if I see anything. Even if you go to the 4 hours, you can see SPY is now, it's already rejecting from that support line that I had that now is essentially resistant, right? So you can see that long wick price tried to come up, but it rejected from it. I also have this downtrend line that may potentially act as support. So you may see price come down. That's why I said for me, SPY, I may want to see SPY come down here to the 350.72 and see what it does before it pulls back. So that's SPY for you. Also, I think that's all of them. So let me go to one thing I want to show you real quick on YM. And I believe it was on the monthly on YM. If you look at your candlestick formation, I believe it was YM or maybe it was SPX. But look on the monthly chart. There was this nice candlestick formation that was formed, which I call it I'm going to go back to that one. All right, let me jump to next. I'm going to look at some inverses real quick. So for those of you guys who may not know how to trade the bearish market, you guys don't know how to short or do any type of bearish strategies, whether it's, whatever strategy you can do on the bearish side of it, you can also trade those inverses. All right. So I'm going to show you first. I'm going to look at SDOW. So SDOW, which is the inverse of Dow, because we know Dow is going down. So SDOW should be going up. So look at SDOW right now. I do have some areas that I am actually looking for on SDOW. I can delete this. This is gone. So SDOW right now, it actually came down here, formed a new monthly, and this is probably a new monthly as well. It came up, and then SDOW, actually, this red line for me is my resistant area. And on last month, as you can see, the market closed. It pushed above it, but it actually closed below it. So this area is somewhat still acting as resistant. This was a monthly zone. So SDOW actually pushed through my monthly. It was a triple zone. So there's nothing I can do with that. SDOW also, in addition to SDOW, I'm looking at, so we're still seeing some upward movement. If price breaks above on SDOW, 43.57 is the area I'm watching on SDOW. If price is able to close above this level, and then when you come back and see a rejection from it, then I'm going to take this long. In addition to that, I'm going to look at SH, which is S&P. It's the pro short S&P 500. Same thing. Remember, SDOW does things first, or the Dow in general does its move first, and then SPX follow. So same thing here. We have SDOW that did its move first. You can see SDOW actually already pushed through that red line. SPX or SH is right behind it. So that's why I always use Dow as my leading indicator, because SPX follows suit. So now if you look at SH, which is the inverse of SPX, right now, SH, I'm looking for 1739 as the level for resistance. This is my triple zone, my triple supply zone. Monthly is yellow. White is weekly. And then we have the daily. You can see right now, price closed on Friday above all three. So these zones are no longer good for me. So what does that mean? I'm going to leave it because to see how price come back, because right now I have a resistance here and a support now, potential support. So I'm going to look and see how price is. You may see price trap between these two until you see either break to the top or break to the bottom. So right now I wouldn't even trade this zone here until I see a breakout. I need to see price reject or reverse and reject from this line and then break out of here, and then I'll take it to the top. If not, if I see a fake out and price come down here, I want to see price come back down into my zone and then reject from this white line here, and then I'll take it short. So that's also going to be something I'm watching to see as well. So that's SH, I believe, SQQQ. So if you trade NASDAQ, all right. So if you trade, and I think I didn't go over QQQ. I'm going to go back to QQQ. But before I do, let me do QQQ first, and then I'm going to come back to SQQQ. So if you trade a NASDAQ and you trade QQQ, all right, so for it was a little choppy for me. So let me go to the monthly for QQQ real quick so you guys can see what level I'm waiting on. Right now, it's inside of a monthly demand zone. It stopped on Friday on September. It closed at the top of a weekly demand zone, and at the same time at the daily. So I'm looking to see if price is going to push back up. However, I see that volume is down. So I don't see if we do push back up, there's not a lot of it's not going to be a strong push up because we have volume going down for me right now. So I'm going to be watching that. Let me go down to the weekly. Same thing here. I don't see any candlestick formation. So that's going to be for QQQ. So I'm watching to see what QQQ does once it comes into this level. You may see a potential even further down and then see a pullback. I see a little bit of upside on the daily on volume. I see just a tad bit, not really. I don't like that either, just because this volume right here was it's higher than the rest of them. So if I'm looking at this, it's more so downtrending. So this is telling me that potentially we're going to see some more downward movement. So tech has really been taking the beating. So you can see it in the market. So let me look at SQQQ now. For those of guys who can't go short, you can actually go long. And you can go long on the inverse, which is SQQQ. All right. So on SQQQ, what I like about this, it actually formed a monthly zone with this month candle. You see that nice buying pressure pushing up. So I have this monthly zone in yellow here. There wasn't any really weekly zone until the lower part of it, but I do have a few daily zones. What I'm actually looking for SQQQ as well, the same line I'm looking for that Dow rejected from and SPX is actually approaching. You can see now SQQQ is right behind it. So again, the way that I look at the market, it goes Dow, then SPX follow, then NASDAQ follow, and then Russell follows. All right. So typically that's kind of Russell and NASDAQ somewhat trade close together. But typically, I use Dow as my lead and see whatever Dow does, everything else typically follows suit. So SQQQ right now is approaching I believe this is a daily gap. This is inside the monthly. It also finished out this first daily. It's touching a weekly and it has a daily. So it's somewhere inside of a triple zone. So I'm going to see how this react. In addition to that, this resistant line for me is important. So if price is able to reject from, you can see that it's been rejecting, right? Initially it was support. Price came down here, rejected from it. Price came down here in February, rejected. It came down in March, rejected. And then it finally broke through in April, right? And now because it's no longer support, it now becomes a resistant line. So what happened the next month in May, it tried to go back up, rejected. So now it becomes support turned to resistance. So I always tell you guys, leave your levels once price break through it to kind of see what it does, to see if it's going to be a strong support or strong resistance, and we'll give you confirmation to see where the market is going. So let me go down to the weekly and then the daily for SQQQ. It's still inside of this daily zone. The blue for me is a daily supply zone. So it's still inside of the daily. I presume it's going to break through, but you may potentially see some pullback because I see this gap right here. So on the daily, if I look and see what it looked like on the daily, I see this this bear gap right here. So price came right to the gap and stopped. So again, depending on what price will be doing, you may either potentially see, depending on momentum, you may see right now a little bit of pullback before we go higher, or you may see price actually come inside the gap and close it and then pull back down. Or again, if momentum is extremely strong, you may see price literally go all the way through. So I'm going to be looking at SQQQ as one of my tickers as well. And again, this works for people who have small accounts. If you can't trade those big accounts, the inverse, they cost less. All right. You can actually, and I'm going to talk about that later. All right. The next one somebody asked me about is UVXY, which is the VIX. You can actually, it's the pro shares for the VIX. So again, you can't trade the actual VIX, but you can trade shares of, you can't trade shares of the actual VIX, but you can trade shares of UVXY. So this is what UVXY look like. I actually like this one. I'm going to tell you why I like it. Let me start from the monthly. With UV, there wasn't any bottom for UV for a while. And then it finally came down back in August. This was my initial support line right here at about 1116, right? Price came down in July, closed below that line. So right now I'm saying, okay, let me look and see if this is going to turn into support. Into resistance. So what happened the next month in August? It did act as resistant, right? You can say August price never got above that 1116, that green line. But then the next month, which is September, it actually broke that now resistance. So now this is no longer resistant. This is now going to look and see if it's going to be support now. So again, whenever it changes, it's changed to support, resistance back and forth until it's no longer strong. So now I'm going to leave this to see if price does come back and pull back, is it going to serve as support before it goes up? So I'm looking at this. This is my demand zone to go up here. Let me show you why I like UV. If I'm looking at UV right now, one of the things, this yellow line right here, right? This is my down trend line for the monthly. This is the overall trend line. And right now on the weekly chart or the weekly time frame, initially UV actually rejected from my trend line, but now we can see the last week of the month, it actually broke through my trend line. It broke through my monthly in addition to this other trend line. So it broke through two trend lines. Let me see if there's other trend lines around. It broke through two of them. And I'm looking to see right now, in addition to that, here's why I like UV. In addition to it breaking through my trend line, which is some confluences for me, look at this candlestick formation. This nice bullish hammer. This nice bullish hammer has formed at support or resistant turn support. So this trend line for me was resistant because initially price was rejected from it and then price closed above it. And now this trend line is acting as support. So now I have this candlestick formation, which is a hammer, which is going to be a bullish signal, is formed at support, a key level. Not only this trend line here is support, I do have this green line that's also support. So I have it in a double area, also above this this monthly zone. So let me see how price reacts to that. You can even go down to the 4 hour to see what it looked like. If I go to the 4 hour, you can see right now price is already rejecting from this down trend line. So this red one is acting as support as well. So that's also, and you can see that price is inside of a channel right now. Let me go down to the daily back so you can see what's going on. So I do have support down here at this green level, which is about 1174 area. And I believe that's what I have here. So 1173 to 1092. That's my second support right here in this green box. Right now, price is going through this. This was a resistant level. But because price is currently in this level, then my level turns gray when it's inside of it. If it was true resistant, you would see it turn red. All right. So right now I'm looking to see if price is able to bust through this level and then start rejecting from it. Then you will see this turn green. If price reject from it, this will turn red for me. So that's how I know my support and resistance level are going to be good. So that's UV. I want you guys to also pay attention to this one if you haven't done so. This is DXY. This is the US dollar currency index. The reason why I want you to pay attention to this one, this is the strength of the US dollar. All right. So what does that mean? As the market goes down, let me back up. As the dollar goes up, the market goes down. So the dollar and the market are inverses. So when you see that, look at this. On the monthly, the dollar's been trending up. It's been going up. And the reason why it's been going up, why? Because our market's been going down, right? So as the dollar gets stronger, our market drops. So you can see now when our market turn around and start going up, you will see the dollar fall back down. So that's DXY. The level I'm looking for on DXY is 121.02. I'm watching to see how price reacts to that level and then come back down. So that's going to be DXY. Right now, we're showing a bit of and you can see it's uptrending. We're pulling back, impulsive, retrace, impulsive up, retrace. And impulsive is not very strong, but if you can see it's going up either way. All right, I'm going to do Apple, Amazon Shop, and I believe that was the last one that I did. One other thing I want you guys to look at before I jump to Apple, one thing the market is doing, and actually I think it's on Apple as well, but the market is oversold right now. We're in extreme oversold territory. What does that mean? Let's look at it. So this is Apple. I'm going to start with Apple on the monthly. So for those of you guys who asked for Apple, I'm going to go ahead and look at Apple. One thing I'm going to show for Apple right now, Apple is actually inside of a symmetric triangle. If you look at it right now, this is an uptrend line and this is a monthly zone. So Apple is literally inside of this symmetric triangle. So I'm looking to see potentially Apple can come down and then bounce all the way back up to the top because this is going to be a bullish pattern here. That's why I said we're actually dependent on Apple right now. The market is dependent on Apple to hold its weight to see where we're going to go. All right. So Apple, for me, I've been watching Apple a lot now. It's going to be a catalyst to see where the market is going. It's not as low as everything else. But right now, Apple is approaching a monthly zone, which is this yellow. It's at this daily right now, and it's a weekly. So it's a triple zone here in addition to my downtrend line. So for me right now, Apple is important for me right now to see what Apple does at this level because this is 4 confluences for me in addition to what I'm going to see. But what I don't like about Apple, here's what I don't like. This candlestick formation that was formed in August. So August candlestick formation is literally, if you look at that, it's a shooting star. This is the bearish reversal signal. So as you can see right now, because this is a shooting star, you can see that steep drop after this star was formed, the shooting star was formed. And you guys can see this pattern right here as well. So not only do I have this shooting star by itself, which is this candlestick formation, my pattern to say, you know what, that would be my signal to short. In addition to that, a second pattern, which is this one right here, I do have a rally up, a base, and a drop. And this is going to be my morning star. This is my morning star pattern here. That's also a bearish pattern. So Apple is actually showing some bearish signal, but we're gonna see. That's why I said the market may have some more time to go down. But this level for me, I'm gonna watch it. We may see a bounce before we see any downward movement. Let me go to the daily and show you guys what Apple look like and what I'm looking for on Apple. Right now, again, Apple is approaching this turquoise for me is a daily demand zone, and it depends on what your trading style is, depending on what time frame you trade. So again, if you swing, for me, I do both. I swing and I scalp. So I may look at the higher time frame, the weekly, and I swing from the weekly based on where I think price is going to go for that week, or I may calculate it for 2 weeks, depending on how long I want to swing. And if I'm going to scalp, I'm going to, of course, use my daily highs and lows and go ahead and go to a lower time frame and scalp on the daily because I know my potential highs and lows. Same thing for my potential highs and lows for the week when I do swing. So as I'm going down right now, Apple is approaching this daily. It's also a monthly, and you have a weekly below it. So again, I'm looking for Apple to come down as probably as low as, let's see, about the 133 area to see. So I'm watching that 133 area for Apple here and see what happens when it comes here, because there's a lot of confluences here. There's my trend line that may be acting as support. There's a daily zone, a weekly zone, and a monthly zone. So this is 4 confluence in this one area here that I'm looking for. So I'm looking to see Apple come down here. We may potentially see a bounce from Apple back to the upside, but maybe not too far because we do have this trend line here that may act as resistant. But again, if momentum is strong enough and Apple do push through this trend line, I also have this resistant line right above, which is at 150.10. So I'm just looking to see what is going on with Apple. And again, momentum is going to play a big part of it. In addition to that, volume. As you can see right now, Apple did give me a spike up on, what day was this? September 28th. So we had high volume on the buyer side. And then we started to have some decrease in volume for the sellers. So right now, based on volume this week and how far Apple traveled down, I would like to see if volume is decreasing or if volume is increasing. And that will tell me, give me an idea of where the market is trying to go. So that's going to be Apple. I believe the second one is going to be, let me make sure I have all my zones for Apple. Trend lines we have here. And then I have some resistant level for Apple up top. So again, even if Apple come down here, I do see it potentially resisting from this trend line here, just because I do have a resistant level here and then potentially dropping further down. I do have a slight support right here, which is what I'm talking about. So this is 4 confluences now. So I have a monthly, daily, weekly trend line, which is 4, and a potential supply zone here. It's a slight one. So that's about 4, 5 confluences. So all I'm going to be looking for now is candlestick formation, momentum, volume, and then confirm from there. So that's going to be what Apple is. Let me go to Amazon. All right. Amazon is, again, somewhat just like Apple. It's in the tech industry. So most of these companies are trading similar. All right. So what I'm looking for on Amazon, the level I'm watching is 102.53. 102.53 as potential support on Amazon. Right now, Amazon is passing through a daily demand zone. I see it potentially going lower. So as it gets lower, I'm going to be looking for this level here. The reason why I'm going to watch in this level, because again, it's a triple zone. Well, it's a double zone plus a support. So I have a weekly demand zone and I have a daily demand zone, but I also have this support line that I'm going to be watching to see what Amazon does when it comes to this support line. Is it going to bounce? Maybe bounce and probably reject from this trend line and go even further down, or see what it does. But if Amazon closed below this green line, which is at 102.53, call it 102 area, 103 area, I'm looking now to see if this now support line is going to turn into resistance. So once Apple closes, or if Apple closes below it, now I'm going to see when price reject or retrace, it's going to now start to reject and come back down. So you can see right now, this line was acting as resistance for a while. Price came up here, didn't go above it, it rejected and came back down. Price came up here, tried to test again and rejected. This was what? July. And then again, back in February 2020, price came up, rejected. So this is literally about a year. This has been acting as resistant. And then finally, price broke through in April 2020 and all the way through. Now we see price came back down in May of 2022. So that's 2 years later. Notice how this line has been holding for 2 years. So 2 years later, here we are. Price came down and it's no longer acting as rejection or resistant. Now it's supported it. Price came down here, supported it, pushed back up a second time, and right now it's been supported. So I'm trying to see now for Amazon, is this line going to continue to be support, or is it going to break through because we're in such a downward momentum? We're in such a bearish territory, all right? But what I'm ultimately looking for on Amazon is this area here, because once we enter this monthly zone, which is my yellow box demand zone, I do have 2 weekly inside of it, and I do have some. I didn't plot all my daily, but you guys can go on there and chart your daily or whatever time zone you chart. You can go ahead and chart that on Apple or on Amazon, and then see from there. And also I do have some trend line at the bottom of it too. So if we come down here at this key level, which is going to be support, the weekly and the month, the daily, I do have a down trend line that's going to potentially act as support as well. So I am looking to see potentially Amazon come down here and then reject as well. And also you can see that Amazon has been consolidating. So whenever the market consolidates, it's looking to break out to one direction. So if it breaks out to the top, then you know it's going to potentially go up. But if it consolidates and go down, then it's going to continue its pattern. All right. So whenever you see the consolidation that happens, there's 2 reasons why to consolidate. The market either consolidate because it's resting, right? It's going to, whatever trend is, if it's downtrending, it will rest. When it rests, it either rests to either change or reverse the pattern, or it rests to continue the pattern. So in this sense, you're going to have to see what Amazon is doing. I'm still bearish for this month. I'm still bearish for November until I see clear signal that we're going to turn around and be bullish. But right now, with everything that's going on in the economy, with everything that's going on in the market over in England, just everything that's going on, we can see that we're potentially going to be some more downside to it. But again, nobody knows where the bottom is. So let's go ahead and just be smart with it. So that's Amazon. The other one that I look at was somebody asked for SHOP. So let me actually type it. I don't trade SHOP, but I'm going to look at SHOP, and then I'm going to show you guys. I think Johnson & Johnson was another one. I don't trade Johnson & Johnson either, but I'm going to take a look at them so you guys who do trade it to see what's going on. Whew. So SHOP is actually reminding me of Peloton for some reason. I don't know why. So SHOP has, this is the monthly. Look at SHOP. So on the monthly, let me go. It went up, and SHOP is literally down to its level from 2019. So 3 years ago. So SHOP is at its three-year low. You can see that right now. It's been downtrending since then. So it's not something that I want in my portfolio right now, just because of how it's reacting. If anything, I would just probably make some bread off of it, shorten it or whatever I need to do. But so what SHOP just did right now, this is the weekly zone. SHOP just broke through it. That was my monthly. So SHOP broke through my weekly, closed below it. It actually closed below my monthly, so I can delete that. It took out all these monthly buyers. So now I have this red line that was initially support. It was acting as support for a few months and then for a while. And now literally last month, price broke that. So now this is no longer support. So that's why I changed it to red to see now when price do pull back, is it going to reject it and act as resistance? And if it does, then you may see potential price, even SHOP is going to fall further down. For SHOP, 1766 is going to be a major support level that I'm watching. The reason why I'm watching this level is price. If this level is able to hold and SHOP is able to recover and then pull back, then you may see it pulling back and just, be able to recover a little bit. But if not, if it breaks through this level and even this double zone here, which is the monthly and the weekly, there's also daily inside. I just did the two of them. So there's a triple zone as well. So if price is able to break through this and come here and also break through this, man, take it out of your first of all, it should be out of your long-term portfolio right now. I already dropped that one. But that's the level for SHOP. Hopefully you guys got SHOP. Let me see on the daily, what does that look like? So yeah, SHOP right now, and I can see, look at this candlestick formation here. I have this, again, this is another shooting star, and this is a bearish candlestick formation. Again, this was initial support. This was green at first because it was support. Once price closed below it, I had to change it to red and see how it's going to act as resistance. And you can see right now on the daily, price literally came down and then tried to retest and it rejected from it. So now this line is acting as resistance. In addition to it, I do have this downtrend line that's also acting as resistance. And I have this nice pin that's acting as a bullish pattern for me to go down. So I do see SHOP, again, some downward movement for SHOP. And it's also right above this huge supply zone. So yeah, SHOP potentially is going to be going. I don't see any support zone below that. So SHOP potentially is going to be going lower. But we can look at that. Again, it's trading off the market. And then finally for that one, I think somebody asked for JNJ. I don't trade JNJ either. But let me see what JNJ is. So I did, I quickly charted some zones on JNJ real quick. Let me look at this real quick. So JNJ actually hit, so it's uptrending. That's the first thing. So JNJ and Johnson & Johnson is uptrending. So it's forming higher highs and higher lows, right? It's also uptrending in a channel. You can see this green up line and this yellow line is inside. So it's been ranging in between this channel, but it's been uptrending literally. This bottom line has been acting as support and this top line been acting as resistance, right? It finally broke through, but then it topped out up here. So 186.69 is now my ultimate high for J&J. So right now I'm trying to see how low it's going to go. It's going to come back down and still have this yellow line, which is my uptrend line, and it's going to be the monthly. Is this line still going to be support? If not, then you may see Johnson & Johnson potentially reverse. I'm not sure if it's reversing or not, but we can see what's going on and see if price even come down to this double zone, which is also a triple zone. I didn't chart the daily, but you may see price come down here and potentially. So if it breaks below this yellow line, watch it. You may see it going down. The reason why I say that, because again, this yellow line now would potentially act as resistance. So if it comes down here and price is not able to come back up this yellow line, you may see price even drop further down. And I do have this trend line at the bottom as support. So that's going to be for Johnson & Johnson. Let me see if I see any support level on the daily. So I do have some support level on the daily right now for J&J. Let me make that bigger. So it is, it's consolidating a little bit right now. It's zoning, it's ranging, so it's dropping down. But I do have, it's approaching support right now. So I'm looking to see how it's going to react. It's going to touch it, which it already did, and then come back and, reverse and just consolidate a little bit, or if it's going to go lower. So that's what you can look at for JNJ. But JNJ potentially could come all the way down here, because this is my triple zone here before we even see a pullback to the upside and go back up. All right, so that's what I'm looking for JNJ. This is Murrey math. I'm a math person. So looking at this Murrey math right now, it's telling me that on the daily for SPX, we're at the bottom range. And I believe on SPY or even Apple. So right now, bottom range. Let's look at Apple. And that's why I said Apple may potentially even jump back up. Apple right now, strong pivot point. So we're at the point where we can actually turn around. But even if you go down to like the 4 hour, Apple is at ultimate support. This level, typically when you see price hits here, we may see a bounce. So that's why I said right now, expect somewhat of a bounce. It may not be long term, but do expect a bounce because of where price is and where the market is in general. SPY is also at that level. So most of these tickers are at the level where you're going to see a bounce, maybe short term. But if you need to be able to look at it, just make sure you trade wisely, follow your chart, and then look for those candlestick patterns. Ever remember, standard D. Use those. It's literally for it's mostly for scalpers. So whoever day trades or scalp, standard deviation helps you. The way it helps you, it acts as a potential support and resistance. The reason why I said that. Let me explain standard D for those of you who don't understand. Price on SPX, on SPY, just in general, just in the market. Typically, price travel within one standard deviation. What does that mean? One standard deviation just means that about 63% of the value is in that average range. So average price, when price travels in one standard deviation, it means it's traveling within the average range. When it goes above that, so if it goes positive 1.5 or 2 standard D, if it goes negative 1.5 or negative 2 standard D, that's when you'll see volatility in the market. It's going to be huge volatility or large swings. So whenever price gap down, so again, for example, tomorrow, let's say the market is down and price decided to gap down at negative 0.5 standard deviation. Remember, typically it travels one standard deviation. So if it gaps down at opening bell, 9:30 Eastern at negative 0.5, literally it opens up. It already ate up half a standard deviation. So it only have a half left to travel. We already know that more than likely the market is going to travel, depending on momentum, it's going to probably travel beyond that one half if it only does that. So that's when you have to recalculate your potential lows or your high, depending on what level the momentum is, to figure out what's going to be your new low, because half a standard deviation already taken up. If it starts at 0, 0 is your level. Wherever price closed the previous day, that's always going to be 0 standard deviation for the next day. So whenever if price start at 0 and the momentum is up and then price is actually going up and never trace back, then you can, depending on how strong the momentum is, you can actually say, you know what? Okay, it may go to 1 standard D and stop there. It may go to 0.5 standard D to the top and then go back down to negative 0.5. That's still 1 standard deviation, but it just does it half at the top and half at the bottom. And when does it happen? That's when the market consolidates. So if it consolidates, you want to see it in the positive and in the negative. If it's strong upward, you may see it start at 0 and never retrace from 0. It just literally stay up and go to 1 standard D, may pass it 1.25, 1.5. If it's negative, you may not see it reverse or retrace back to 0. It may just drop below 0 and go to negative 1 standard D, negative 1.25, 1.5, whatever the case may be. And again, it's based on momentum. So when you're looking at those standard D lines, if they're once price close below them or above them, look and see. Now, remember, they're acting as support and resistance. So one price either close or above or below, then you're going to see, okay, it's going to turn into support or resistance. And then you're going to look at that and see, okay, watching momentum to see if momentum is above 1 or below negative 1 and see what's going on in the market. And that will kind of help you to see where's price going. Again, that's only if you're scalping. If you're scalping, meaning if you're trying to get into a trade within the first 2 hours of the market or the last hour of the market, then the standard deviation value is going to be what you use in addition to the potential highs and lows, so you can know where to get out and get in, if that makes sense. All right, so I think I'm going to start doing my analysis on Sunday night, so you guys could either have it and drop it on YouTube so you guys could actually watch it before the market open, chart your zones, and I'll probably just try to do it a little bit earlier